Good morning, everyone. Welcome to the Stock Market Morning Prep video for Friday, April the 4th. Markets took a little bit of a breather following the 4 days of consistent gains. Dow Jones down about 45 cents, S&P down about 2, where the NASDAQ down 38 and Russell 2000 down almost 12. Really took it on the chin again, and you could see money rotating out of big cap tech and big cap bio. As well as Russell 2000. And they're going into these other sectors like energy. We were speaking about that. So we're going to follow up on the energy sector as well. So today's going to be the non-farm payroll numbers. They're going to be heavily anticipated and closely watched. And it's not what the numbers are reported, it's how the market participants react to it. It's really what you want to keep an eye on, okay? 8:30 Eastern Time in the U.S. So we're going to see what happens today. We're going to dial down into some of the charts here. And what I want to look at is the yen, the bonds, and of course the almighty dollar, and see where that could give us some clues of where this market might be headed next week. Usually now, sometimes I haven't seen this, but non-farm payroll numbers would dictate pretty much the trend of the month. So be really interested to see what happens at 8:30 Eastern Time. All right, so now we got the Japanese yen. As you can see, we have this ascending triangle coming off of this bearish symmetry. Everything looked fantastic for a big move up, and sure enough, we had this Fibonacci cluster up in here, and then we just literally just failed. And now we're breaking down. Again, bodes well for stocks. So we want to see continued weakness coming out of the Japanese yen. All right, and this is the spot yen I'm looking at, which is inversely correlated. If you are looking at the dollar yen, it would follow what S&P is doing, so it would be correlated with the S&P 500. Okay, but I like this. So this bodes well for stocks moving up higher. Remember, we are at extensions, we are overbought, and we are fairly valued. So there's not much in the way other than the trade is just buying what the Fed is going to do. Remember that. So these numbers are going to be very important to Janet Yellen and to making her decisions in the coming months. So anyway, back to the yen. We are still looking good here, though. Still constructive. So we just want to use a little caution here. Now here's where this becomes a little tricky. We have the dollar index. Okay, this is just a dollar index, no pairs. But what happened is we have this bearish symmetry of making lower lows and lower highs. We did break out of this bearish symmetry, and we started going into a triangle formation, or a pennant, if you will. And we started, you see the candles, how large they get, and then they get really small. That means energy is building. Well, we just broke out of that yesterday. Okay, that is very bullish for the dollar, bearish for a lot of commodities, also bearish for U.S. equities at this time. That's the relationship. Now remember, things do change. If in fact, and this is just a conversation, when you have a lot of foreigners come in with their money buying real estate and stocks and what have you, they have to convert their dollars into our dollars, which would be the almighty buck. That will also push prices on U.S. dollars higher along with U.S. equities. But right now, the relationship is inversely correlated, okay? But that does change. So just got to keep an eye on that. It's a bit tricky, but keep an eye on that. Right now, if the dollar goes up, commodity prices will move lower, and as well as equities. But again, that could change at any given moment. I just wanted to make a point here. Okay, so we had consolidation. As you can see, RSI actually held right around that 50 area. So that means that we had good positive momentum in this index, and now we're just below the 200-day moving average. If we start to break back above it and break above this 200-day moving average, well, the next target is going to be really the highs, the old highs of 81.54, and then of course the main target would be the 1272 extension way up in here at 82.143. Okay, so keep an eye on this, because this is going to give us a cue of what's going to happen coming next week, and we can position ourselves accordingly. All right, coming into today, book's very light, not doing much of anything, but I love the energy sector, which we're going to speak about, as well as the builders. And that's something that we're going to pay attention to, because next week you can start preparing yourself for next week's trade. Okay, now the bonds. Bonds, same thing. We had this move lower. Okay, we had this bearish move lower, and then all of a sudden, boom, we started breaking back out, breaking to the upside, and then now we have this resistance area. We tried to break out the other day, and we failed, and now we're breaking down again. And we had this bull flag which failed, coming out of here, and now we're just kind of chopping in this channel. So we have this sideways consolidation channel. If we start to break down, And I mean, if we break down considerably below this, this is going to help equities because money will rotate out of bonds and go into U.S. equities. Okay, so this is something we need to keep an eye on as well. But remember, guys, I like to see everything in sync. If everything starts to play out accordingly, lower yen, lower bonds, higher equities, and then, of course, if the dollar starts to reverse and roll over, or just even if it's just stagnant, it just runs into another base for a few days, you can really play U.S. equities to the upside. But we need to really watch this, what happens. Again, news will trump the charts. Remember that. Go into the hourly ES. We had new highs in ES, the transports. So the leaders are doing what it has to do. We are now above the 1272 extension. Believe it or not, and I know it sounds crazy, 1917 is the next target, which would be the 1618. And that's going to be your upside target here. And it can easily get there. Remember that. Do not fight the Fed. Do not fight this trend. It's very, very powerful. And although, as much as I don't believe it, it is what it is. The Fed is backing this, and that's what we have to realize. We want to look for good quality stocks. The problem is the stocks have risen two and threefold. Nothing is cheap anymore, so we have to look for stocks that have either pulled back, maybe had an earnings miss, and then from there digesting the move. So take a look at this. I do like this higher. If we do in fact move, we get that confirmation today. We break out of this little base for 2 days. Then really buying the dip mentality is going to be back intact again with the markets. Okay. Spiders, again, inside day from the previous day, not much of anything. We didn't have really any movement in the indices, and we are at the highs here. If we do break out, next area is going to be 192, 192-ish in the spiders. Okay, and transport's doing just exactly as planned. Again, big explosive move. Next area would be the upper end of this channel, and let me just get that up here. Okay, upper end of this channel coming around 141.5 here. But again, this is exactly what you want to see, increase in volume as the days go on. And then we had a lower volume day, which is perfect. So it's just a pause day. Okay, now we have the IWMs. Now remember, it is one of our leaders, and it did make a lower high from this previous low here, this previous high. But nothing wrong with rotation. If money's coming out of the Russell 2000, small cap, and running into energy and running into maybe tech or retailers and truckers, which they were big, obviously the transportation sector, that's fine because money will stay in the marketplace. But if the money's rolling out of Russell 2000 and into bonds, and bonds are rising, that's not good for equities. But at this moment in time, there's nothing wrong with it. So again, made officially lower high from this previous area. Can't even get above the uptrend channel here. So again, looking pretty constructive, and I think this thing has room to move to the downside. Q, same thing. With the big cap tech, momentum stocks, and big bios, the Qs really just can't get out of its own way. It also made a lower high from these two peaks. So again, money rolling out of the Qs and back into these other sectors, which is fine. Okay. Now, Diamonds last is made new highs as well, and now this here is challenging this area here. So if it continue to break out, you got blue skies ahead, guys. So that's what I'm saying. Don't fight the trend. As much as I would love to see a pullback, it's just it's sad because you want to really get heavily involved here, but with the markets at extreme levels, complacency is at all-time highs, and you have stocks that are fairly valued and very pricey. It's very difficult to get involved with stocks and put in your portfolio, at least even for swing trades, because at any given moment we can actually roll over. Okay. All right. So now we have the sectors, and now here is what I was saying, and this is where we come and bought a lot of emails. Oh, it's a big rising wedge. It broke down. It confirmed. Absolutely. But the thing is, I don't take the first trade. I like the back test and then fail. And if it broke below this area here, then that would be my cue to get short. But it did not, and it made another base, and then now is breaking out of this bearish rising wedge. And remember, it's only bearish if it broke, and it did break, but then it came right back in again. So if you did take it, you'd probably have gotten stopped out. But I do like the XLE. They're a little pricey now. They've actually rallied for a few days, and I'll just show you. Look at the XOP. Put in a doji candlestick, meaning indecision. Doesn't mean we sell it, but if it breaks back below in here, then it's going to be your cue to take your profits if you are in this, the oil and gas. I like it for a move lower. Not to short it. I'm not looking to short any energy plays. But remember, stocks move and then crude oil moves. And that's what I wanted to show you guys, that let you know that USO is probably in play. Again, aside from, we have to sidestep this number though. If the number comes in okay and they like it and doesn't affect crude oil, then the crude oil would be in play. You could buy USO, because once you get all these energy stocks start moving, they anticipate oil to move as well. Okay, and here is Valero doing nothing wrong, but again, pricey up at these areas. I want to see a market pull back. If energy stocks can pull back, I think it'd be a great little spot. Now, here we're in a good spot here. I like the location with USO and crude oil. Let me just grab the chart here, just real quick. Is up another 73 cents. Broke back above the 100 area, now at 101.03. So my cue here is going to be looking for a spot for USO. I'd love to buy it. I want to make sure that we get the non-farm payroll numbers out of the way. Nibble a little bit is fine, and then we can build off of this candle, and then at least we can challenge the highs here, 36.80, 37, and then of course this new high, which is pretty much heavy resistance here, guys, okay, which will come in around $38. But again, I like the spot. We did have this breakdown, and now we're following through. Hopefully we can get back above here and look to nibble in USO. Okay, OYH, you can see the drillers, the oil service sector here doing fantastic. But again, look at where we are at the Bollinger Bands. We're pretty high here. We need a little bit of a pullback. Revision to the mean would be perfect, which would be that 20. I'd like to see it come in here, maybe chop around again, and then look to start nibbling into the OYH. Here's Apache I mentioned the other day. Now, it was underneath the 200. We broke out of it yesterday, but we broke out of it yesterday, and now we're coming into non-farm payroll. So I like to see these bases. This is beautiful here, and this is ideal. And we had Apache on the radar. Now we just want to pull back to the 8, make a flag, some sort of a bull flag, and then look to buy this. Blue skies above, guys. I mean, next target is 88, and then really your big target here. Look at the volume zones. I love this. APA is going to be a real player, and that's something where you can start building your trading plan for next week. So I do like some of these energy plays that just starting to go. Schlumberger, I do like SLB, but I do like it on a pullback. I wouldn't buy it here. Okay, and ITB Home Construction looking good. This is going to be a play for next week. And you can see, just to show you the XHB, broke this bearish symmetry, just running through these charts here, and then we can take a look at some of the builders. Now, Lennar is my favorite. If Lennar could take out the 4086, this is something I'd be llooking to buy going into next week. And remember, seasonal tendencies right now is strong for the home builders coming into April. Toll Brothers exactly the same. So these are my two favorites. And then, of course, you got Pulte, which is a little lower price, but also doing very, very well here.